I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Bitcoin dips as President Biden's pick for the U.S. Securities and Exchange Commission says the SEC must root out crypto fraud. We'll bring you all the details. Plus, the governors of Texas and Mississippi have lifted their mask mandates in a radical move to open up their states 100%. As parts of the country try to get back to normal, what does that mean for the company that's kept so many of us connected during lockdown? Zoom CFO Kelly Steckelberg is with us after their latest earnings report. And Senator Elizabeth Warren says the Ultra-Millionaire Tax Act would raise $3 trillion. $3 trillion over the next decade. Our conversation with Senator Warren and what she has to say about breaking up big tech. We will get to all of that in a moment, but first, a check of the markets. Tech shares led losses today in the S&P 500. Apple and Tesla dragging down the NASDAQ. Our Ed Ludlow has the latest. Ed, give us the roundup.
Yeah, well, that big rebound in big tech stocks didn't last long, did it, Emily? After the biggest gain since June on Monday, here we are on Tuesday, and it's the tech sector that's pulling down the broader market. Look at some of those names on the move. Apple down 2%, Tesla down 4.5%, Microsoft 1.3%, Amazon 1.6% hit. The narrative is the same one we've been talking about for a while now. Rising yields, putting pressure on companies that have big valuations. And in terms of how that played out in the broader markets, you can see it clear as day. The S&P 500, the main gauge of US equities, off by 0.8%. But again, NASDAQ 100, a very tech-heavy index, a bigger decline of 1.7%. The NYSE FANG Plus index, which is that basket of the mega-cap tech stocks, including the likes of Apple and Tesla, also off by 2%. And semiconductors having a pretty poor day, down 3% after a two-day rally. The story here is one of 2021 has not been a great year for big tech. If you look at some of the performance year to date, Apple and Tesla are on track to have their worst quarters since the same period a year ago when the virus first really hit the US economy. There is some outperformance, though, by the likes of Microsoft and also Google parent Alphabet. A lot of focus, of course, on cloud enterprise software, things that are helping us to learn and work from home. But in short, a lot of investor jitters still about those stretch valuations and what the environment with rising yields means for tech going forward.
All right, Ed Ludlow in San Francisco with the update. Thanks so much, Ed, for that. Meantime, President Biden's choice to head the SEC, Gary Gensler, went before a Senate committee today, and some might say the timing is perfect. Recent stock market drama has many calling for more regulation on Wall Street. Gensler has experience as a markets regulator during the financial crisis. I want to get straight to Bloomberg's Sonali Bostic for more. So, Sonali, what clues did we get today about how Gary Gensler will run the SEC, especially when it comes to retail trading apps like Robinhood that have caused such controversy?
Yeah, we got some more specifics. I mean, it was thought for a while that the Biden administration would focus more on consumer protections than anything else. That really got escalated with GameStop here. What Gensler is now saying is that he does want to take a look at things like payment for order flow, more around this disclosure of the issue rather than a full-on banning it. There was some recognition here that it's not clear that the retail investors are getting the best deal when they're in this process where a very concentrated group of market makers are paying firms like Robinhood for their order. Now, Emily, if that were to stop happening, it would make free trading a lot harder to happen, given that a firm like Robinhood makes more than 50% of its revenue from something like payment for order flow. So there was a recognition of that balancing act there, but there was a clear desire for better accounting for what's happening there.
Now, some former SEC experts that we've talked to have said payment for order flow, it sounds like it's a conflict of interest on the face of it. It gets investigated every so often, and ultimately nothing changes. I mean, do you think we can expect actual real movement here or just more of the same?
Well, you know what's funny about this? There are disclosures around payment for order flow. You can look and I can tell you how much, within every certain increment of time, Robinhood gets from Citadel Securities, Robinhood gets from Virtu Financial and other brokers, other market makers. You can tell the same for other brokers. There are brokers that don't engage in this practice, right? So it makes you wonder why it exists necessarily in the first place. It does help make the fees lower for the retail traders, so there is a benefit to it. But if you were to cancel it, Emily, if you were to ban it, it would hurt a Robinhood more than it would hurt a Citadel Securities, where there would probably be order flows going there anyways. What's not clear from these disclosures is how much you and I are getting, right? Or how much an average person is getting in terms of a benefit from this happening. That's something that it could be very easily fixed, in my opinion.
Interesting. So as President Biden's financial watchdogs expand their focus, how could that impact bigger tech?
Well, the really interesting thing here is that it did get raised, and it's been something that's been burning on the minds of everyone that covers finance, with so many people leaving Goldman, going to Walmart, fintechs going public and raising record amounts of money. It is something that you can see not just Gary Gensler, but Rohit Chopra at the CFPB, Consumer Financial Protection Bureau, really take an aim at, especially because he's so concerned about making sure that the consumers get the best shake. And these big financial technology and technology companies are having some of the closest interactions with consumer. So that's everyone from PayPal, which has already been very well acquainted with the CFPB, over to Apple and Google, which are working on different credit products with the big banks.
All right, moving on to crypto then, Bitcoin dipping after some of his remarks today. Talk to us about what we can expect from Gensler as it pertains to cryptocurrency.
Yeah, so one thing he mentioned was that, it did open up the financial markets in a different, innovative way that is not a bad thing, right? It could be a good thing. But the other thing he was very clear on is that it could be misused, right? He would want to crack down on any terms of misuse of the cryptocurrencies. The other thing he mentioned that I think is very, very relevant coming into this Coinbase IPO is he talked about more oversight of the crypto exchanges. And Coinbase, as we know, is a $100 billion firm that mostly deals in the exchange space. So how will somebody like Gary Gensler start to impact one of the most valuable financial companies that's rising in this country?
So, well, certainly a lot of contentious issues on Gensler's pay. We will be watching to see how he makes decisions on these various topics. Bloomberg's Shonali Bossack, thank you so much for that update. All right, Zoom out with earnings that beat estimates, but can the momentum continue in a post-pandemic world? We're going to speak with CFO Kelly Steckelberg coming up. This is Bloomberg. Texas Governor Greg Abbott and Mississippi Governor Tate Reeves just announced their states are opening back up 100% and that the mask mandate has ended. Despite some opposition, this is a sign that at least parts of the country are trying to go back to normal and fast. What does that mean for tech tools like Zoom that have kept us connected in a virtual world? Zoom Video has been a top performer over the last 12 months, just beat earnings estimates, but the stock paring some of its gains today. Critics wondering if the momentum can continue in a post-pandemic world. Joining me now, Zoom CFO Kelly Steckelberg. Kelly, we've been asking the same question, I feel, quarter after quarter, but it feels like we're finally here. You're hearing states lifting their mask mandates completely now. What does that mean for Zoom if it means that certain states are at least trying to go completely back to normal?
Well, we saw strong performance last year in all aspects of our business. Our upmarket, where we announced we have over 467,000 customers with greater than 10 employees. We saw a strong performance with Zoom Phone. We announced 18 customers with more than 10,000 seats, and really strong performance internationally as well, growing to 33% of our revenue, up from 20% just a year ago. And so all of that leads to really indicate that these work remotely trends are continuing. We are becoming embedded in every aspect of our lives every day. Customers with fewer than 10 has become a very important segment for us. It was 37% of our revenue in Q4. And this is where we're seeing lots of innovative ways that people are using Zoom every day for more convenience. Think about telehealth, not having to drive to the doctor. And these are all things that we really expect to continue even after we're able to move around the world more freely in the way that we want to. And yet, leveraging the aspects of this time that where we've come to rely on Zoom and other tools for the convenience that they bring us.
Totally agree. It's going to be a hybrid world, and the question is how much remote will there be and how much in person will there be? Shares took a dive today. Of course, they had a big jump yesterday, but then sort of settled back to where they were. Why do you think investors seem so unsure?
Well, I think we weren't the only ones, unfortunately, that suffered today from a sort of a broad-based market, but we're really optimistic about the future. We see huge momentum, as I mentioned, in Zoom Phone. We also have some exciting innovations coming later this year with On Zoom, which is our event hosting platform that's currently in beta. And this will allow these individual sole proprietors, small business owners to have a simplified platform for hosting events and also a directory for being located so they can reach a further network than they've been able to before. We're also excited about Zoom apps, which there's about 25 of these apps in prototype today, which are really going to create more immersive experiences so that it allows you to collaborate, for example, in a Zoom meeting as if you were in the conference room with somebody. So we're listening to our customers and we're really looking for opportunities to continue to innovate as they think about what their future of work strategy is.
I'm curious how this is all impacting your work strategy and what this means for Zoom employees. I mean, it's kind of a meta question, being that you're the company that's keeping so many people connected. But President Biden just said we're going to have vaccines for all U.S. adults by the end of May. What kind of comfort does that give you? Does that mean that your employees are going to be back to the office soon?
So we're really excited, like everybody is, to have the vaccine distribution accelerated around the globe. We are taking a very conservative approach when it comes to our return to the office strategy, as we, of course, had the luxury of living on this technology every single day. And we've seen that our employees have really enjoyed the flexibility that working remotely has given them. Also, we've seen obviously extreme employee productivity coming off the year that we just had. And so we want to ensure first and foremost that all of our employees feel comfortable in returning to the work in a way that feels comfortable for them and also gives them the flexibility if they've moved, if they need to be with family. So we're going to be probably one of the last companies that go back to the office eventually.
Now, as you mentioned, you've been living on Zoom for years. There are companies that are trying to encroach on the territory that you've staked out. We're seeing increasing competition from Microsoft with Teams. There's, of course, Cisco and WebEx. There's Google with Meet, just throwing Meets into Google Calendars. I feel like more than once a week someone shows up on a Google Meet and we're supposed to be on a Zoom. How much are you seeing this competition impact your growth and your initiatives?
So the way that we think about competition is it makes us all be better. We, first and foremost, focus on delivering happiness to our customers, and we listen to them every day. We learn from them what's important to them. We innovate and devote 20% of each product release to our customers' requests to ensure that we're really meeting those needs. I mean, I could go on and on about the innovation that we're focusing on, but as we think about a return to work, other things like Smart Gallery, which is going to continue to improve the face-to-face interactions when you have some employees in the office and some working remotely. And it's things like that where we're really listening to the challenges or the opportunities that our customers see ahead and rising to the occasion to deliver to them. And that's what we think really makes Zoom the video communications platform of choice for our customers.
So, obviously we're coming off an unprecedented year. What does this year look like to you? How will 2021 be different than 2020 for better and for worse?
Yeah, so we're really excited about the momentum that we see exiting calendar 2020. As I mentioned, Zoom Phone is a really important part of our long-term strategy, as is international expansion. During the pandemic, what we've seen is a significant increase in the global brand awareness for Zoom, as well as an acceleration of adoption of video communications globally. And so that has really created an amazing opportunity for both our international sales teams for meetings, as well as Zoom Phone. And we're also excited for the opportunity to move around the world more freely. We know that our employees want to come back together again and have that community and that collaboration. But we expect to, as I said, we expect it to not go back to the way it was before, to be more of a hybrid approach. And so leveraging the best of our technology and the best of being together so that we all have this convenience and we can build into our lives what works best for each of us.
All right, Zoom CFO Kelly Steckelberg in the heart of it all. Thank you so much, Kelly. Always good to have you here on the show. Okay, coming up, service with a smile, or perhaps a light show. Uber is spinning off Postmates robot operations into a new startup. We're going to talk to the head of that project and when you can expect a robot delivery near you. That is next. This is Bloomberg. Grocery delivery continuing to be hot. The grocery delivery startup turning into a giant. Instacart has announced a new round of funding, doubling their valuation to $39 billion. With this, Instacart becomes the second most valuable startup in the United States, second to SpaceX, according to data from CB Insights. With the new funding, the company is planning to increase its corporate headcount and expand projects, including advertising. Instacart is currently the largest grocery delivery company in the United States. Turning now to Uber, spinning out a unit of Postmates. If that story got you feeling hungry and you don't want to venture out, a robot may be coming to the rescue. Uber is spinning off its Postmates robot operation into a separate startup in another effort to turn profitability. The new startup, Serve Robotics, will receive an undisclosed investment from Uber to begin delivering food, groceries, and other items to customers, but without human intervention. Joining me now is Serve Robotics CEO Ali Kashani, who runs the robot delivery units for Postmates that is now spinning out of Uber. So Ali, tell us a little bit about how this will work.
Hey, thanks for having me. Yeah, it works pretty much like any other food delivery. You open an app, you order your food, you get a notification that a robot is on its way, and when the robot arrives, you go outside and grab your food.
So how many of these robots are actually in operation, and how many successful deliveries have been completed?
We have a few dozen of these in Los Angeles. We've actually been serving a few thousand households since COVID began. We were there even before COVID for a couple of years, but during COVID, we tried to ramp up.
So obviously you want to scale this up even further. What are the biggest technical challenges?
I mean, it's a hardware. You have to build robots. You have to make sure that they are reliable and, manage a fleet. From a technology point of view, the autonomy side is actually quite easier because if you think about it, it takes about 3,000 robots to create the same kinetic energy that a single car makes when it's driving at 35 miles an hour. So this is a simpler problem to solve from an autonomy point of view. But we are kind of facing challenges that I think self-driving car companies are going to face later on, which is how to manage a fleet, how to make sure that these things integrate well with society, that sort of thing.
So then let's talk about the business challenges. Obviously, there are many, though it certainly sounds great. It looks great if you can pull it off at scale. But what are the business challenges of scaling this up?
One of the nice things is there's just so much demand for this. We have, we've been doing deliveries for Postmates and now part of Uber. There is more demand than we can meet for the foreseeable future. So this is kind of one of those places where all we have to do is really focus on the technology because we have this partnership.
Now, with this partnership, will that be enough to get to the goal of delivering 5% of all food delivery orders in the United States in 5 years?
Yes, Yes, of course, we are also talking to other partners right now. That's the reason we spun off, so that we can expand our reach. But Uber, does more than 30% of the market, so that could be enough for us to reach that.
Well, and Uber's obviously a big investor now in Serve. Are you talking to DoorDash? Are you talking to Grub?
I can't really disclose that.
So talk to us then about what needs to happen and with whom when it comes to evolving the delivery process.
I think delivery has always been multimodal, and we are focusing on kind of the sidewalk side of the equation. Before robots, this was about 10% of the space. We want to expand that to about 50%, which is actually the number of deliveries that are within walking distance in the country. That's more than 50 million deliveries a day. So that's kind of our focus. There are going to be other folks, whether it's self-driving cars, drones. This multimodality is going to continue, just like it's existed before. You have things moving in trucks, you have things moving on scooters, and you're just going to be one of the kind of key ingredients of this equation.
How has the city of LA responded? How have they been to work with?
It's been great, actually. We partnered with them. Every city we've actually put robots on, we've partnered with them first and gone through a process to make sure that we are partnering with local municipalities. And people absolutely love this. If you go on social media, you can find a lot of posts of people's kind of first reaction to a robot, and it's really fun to watch.
All right. Ali Kashani, CEO of Serve Robotics, thanks so much. We'll keep our eye on you and those robots. Okay, coming up, despite COVID disruptions and worse than expected fourth quarter sales, Kohls has given an optimistic glimpse into the year ahead. We're going to speak with CEO Michelle Goss about the retailer's path to recovery next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Kohls reporting fourth quarter results with $5.88 billion in revenue, just missing analyst estimates, but the retailer giving an upbeat sales outlook and announcing plans to reinstate its dividend, bolstering management and strategy as the company faces pressure from a group of activist investors. Shares are up about 1%. Joining us now to discuss, Kohls CEO Michelle Goss. Michelle, let's start with which categories are performing the way you want them to and which categories you would like to see do better.
Yeah, so Emily, it's great to be here. And we are really pleased with our Q4 results. We've seen sequential improvement in our top line. And I think importantly, we're seeing strengthening on the bottom line, profitability. I know we'll talk a bit about the strategy, but really it's two-pronged, both how we accelerate our growth, but then also how we drive our sales more profitably. As it relates to what we're seeing on the top line, we're seeing categories that have actually strengthened during the pandemic continue to perform. And those are squarely in our new strategy that we just shared in October. So categories like active, we're broadening that, Emily, to active, athleisure, the outdoor lifestyle. We've announced new brands like Eddie Bauer coming in, our own brand Flex. The home category continues to perform very well. And we see that trend continue again. Kohls is very well positioned there. And we are seeing the area we've been really focused on has been the women's business. and how to revitalize that business. It's roughly 25% of our business. We have parts of that business that are doing quite well, like active, athleisure, and the intimates business. We just announced Calvin Klein yesterday, as a matter of fact, in the intimates and loungewear. And then in more traditional apparel, we have a bold new approach. We've exited 10 brands. We are amplifying the brands that are working. We're reducing choices. We're improving the merchandising experience. So as we look at the playbook going forward into 2021 and beyond, we really do see those categories really contributing to our growth, as well as, of course, the transformation afoot with beauty and the launch of Sephora later this year.
Now, that said, you have been facing this pressure from an activist group. They say the board lacks retail experience. They want to name 9 new directors. They're calling out stagnant sales. You've pushed back against this heavily. But if they keep up the pressure, how do you plan to respond?
Well, first off, I would say, Emily, that we have been engaged in dialogue. We want to have constructive dialogue and find common ground. Last week, they did launch a public proxy contest and announced the change of control, take control of the board with 9 directors. And that is not something we're supportive of. I mean, our board has been instrumental in the pivot we're making. They've been agents of change. They've supported the management team in the investments in technology, the foundation we've built that has allowed us to navigate the pandemic, but I think more importantly, sets us up for what's ahead with this bold new strategy of being the leader and the destination for the active and wellness lifestyle. So that includes the top line initiatives we've been talking about, as well as the profitability initiatives that are gaining lots of traction in terms of margin and our expense management technology, by the way, underpinning all of that with a roadmap that, as we've shared, by 2023, getting our operating margin to 7 to 8% while also driving the top line growth.
Meantime, such an interesting backdrop. You've got Texas and Mississippi today opening up 100%, lifting the mask mandate. Some people say it is too soon, way too soon. Then you also have President Biden saying that there will be vaccine supply for all U.S. adults by May. How are you using this information to make your decisions, especially when the future of Kohls, as you've told us, involves not just physical but digital strategy?
Yeah, no, I do believe all that data is informing how we think about the year ahead. As we guided today for 2021, we're expecting mid-teen sales growth, and we are expecting our operating margin to expand to 4.5% to 5% on our way to 7 to 8. Like I was just saying, we also announced return to shareholders and reinstating our dividend and some share buybacks. So we are feeling good. I mean, we have a strong business model, Emily. We have a strong cash generating business. That's what gives us the confidence as we enter into the year with the momentum we have with our strategies and the fundamental changes that we are making. And everything we're seeing and hearing from our customers and the broad macro environment is the key strategies that are working for us right now as we start the year, like active, our profitability initiatives, home, those really carry us into the first half of the year. And the second half, and some of the announcements today around vaccine availability, I mean, we do believe that that's going to be a key part of opening up the economy again and consumers getting more comfortable going out and shopping in stores. For us, Emily, we have an incredible and a powerful omni-channel platform. So we've been pleased with the digital acceleration, 40% of our business as we sit here today. But for Kohls, our differentiation is really our store base. 1,160 stores across the country, 95% off mall, very convenient. It's allowed us to embrace not only buy online, pick up in store very conveniently for our customers, but things like curbside. That was readily adopted by our consumers. We were one of the first in our industry to launch that with our customers. And those conveniences are going to continue. So I feel like we're really set up because as people feel safe again, they're going to want to shop, they're going to want to travel, go to restaurants, update their wardrobe. And I think we're, again, really set up for when that takes hold.
The Amazon partnership brought in 2 million new customers, a third of whom were millennials. How important are millennials to your growth, given that millennials aren't necessarily going to department stores of their own volition?
Well, first of all, what I'd say is we serve 60 million plus customers today. You know, as we like to say, 80% of Americans live within 15 miles of a Kohls. So we serve lots of demographics, including millions of millennials today. As we look forward, though, it is important to invite that base of customers into Kohls, as well as continue to drive loyalty with our existing customer of all demographics. But that younger customer is part of our plan, and Amazon is contributing to it, as you just said. And then initiatives we have across the store, especially Sephora, which does over-index in that younger customer relative to our core base today. And we're going to do lots of things. Even some of the new brands like Calvin Klein we just announced yesterday also do speak to that younger customer. But for us, it's a balance, right? We want to speak to our core base as well as that younger customer, because like I said, over 60 million customers, and we serve many, many diverse families across America.
Well, we will be watching. Michelle Goss, CEO of Kohls, thank you so much for stopping by. All right. Senator Elizabeth Warren is following through on a promise from the campaign trail and proposing a tax hike for the richest people in the United States. She spoke earlier with my colleague Kevin Cirilli about why a wealth tax is the right move, especially at this time, and what results she wants to see from the GameStop investigation.
Do you know what's happened over the last year?
Just last year.
Just in the last year, we have watched millions of people struggle. Millions of people lose their jobs or be cut back in their hours at work, deplete their savings, go into debt. But you know what's happened to the 660 billionaires in America? They have increased their worth by $1.3 trillion.
So I'm thinking of Pittsfield, Massachusetts. I'm thinking of suburban Philadelphia. I mean, there's this massive disconnect at a time in which you have income inequality exacerbated during this pandemic. You were just named the chairwoman of 2 subcommittees on the Senate Banking Committee, and this is really your first issue du jour that you're diving into. Is this a forecast of more things to come?
You are exactly right about the inequality problem, but understand this. Income inequality looks like this. Wealth inequality looks like this, and all the way up through the ceiling. The people at the top have amassed huge fortunes, and those fortunes are continuing to grow, and they're not making a contribution on taxes. All I'm saying is pay a fair share, because here's how we build a future. We invest in universal childcare and universal pre-K. We put more money into K-12 education. We make technical school, 2-year college, 4-year college tuition free. Now our kids have real opportunity. 2 cents more than covers
So the folks who are trying to forecast and price this in of whether or not this has a chance, it's I'll be honest with you, it's a very difficult in the short term to see this wealth tax getting through. But the polls suggest, I think it was an Ipsos poll, that 53% of Republicans are on board with this. You attracted, yes, some progressives on this, but also Congressman Brendan Boyle, who's, respectfully to Congressman Boyle, I mean, he's much more middle of the road than I think some people would think here. So again, do you think that over the longer term that this is going to catch traction on? And have you spoken to the administration on it to get this through?
So yes, I think it's going to. And I think when you say over the longer term, I think it's actually over the shorter term. More and more people are starting to look at the wealth tax and say, wait a minute, this makes a lot of sense. People across this nation get it. Independents, Republicans, Democrats, a majority of all of them want to see us do a wealth tax because they know that the system is rigged against them. The people who are out of step are the folks here in Washington. We get them into line with what's happening across this country. We can get this done.
Secretary Yellen spoke at a Deal Book event, I believe, the previous week, and she raised some concerns about the wealth tax and said that it was very hard to enforce. Is she right?
So I'm going to have a conversation with Secretary Yellen about enforcement, but let me just tell you a little bit about the plan, because we worked on this one seriously. What we propose to do is nearly double the IRS budget. We put about $100 billion into enforcement. That $3 trillion that this will yield is net of having really stepped up the enforcement. And the audit rate for this top 1/10 of 1%, the 100,000 families that would be affected, the audit rate will be 30%. That means every 3 years, in effect, you're going to get audited on this. And understand this, a huge part of the wealth are things that are really easy to value. We've said we're not even going to try to cover anything worth less than $50,000. So we're not coming in looking at people's double-wide sub-zero refrigerators and trying to figure out what they're worth. But instead, it's things like their stock portfolios. Man, that one's easy to value. Real estate gets valued every year anyway. And remember, we value property for the very, very wealthy every time there's a death. So we're already in this process. I think this one is one that we can manage.
You and Senator John McCain introduced Glass-Steagall. Can you get a Republican senator on board with this?
Oh, I'd like to.
You think you can? Are you talking to any?
I actually am. I am talking to a couple.
You let me know.
I will. I promise.
All right, I got a couple more questions on GameStop.
Sure.
What do you want to see done on GameStop?
I want to see a full investigation. I want to know.
Policy-wise, though, is there?
Oh, but that is the policy-wise. I want to know who was behind the scenes on some of the critical decisions that were made, including the decisions about who could trade and who couldn't at critical moments. I also want to see an investigation into the contracts that folks signed in order to work through GameStop, which means they have forced arbitration clauses. So if they get cheated, they can't actually go to court. That's not right.
Merrick Garland, are you satisfied on his antitrust answers as or you think he's going in the right direction on antitrust?
I think that Merrick Garland is definitely going in the right direction.
You mentioned 1 year later into the pandemic, we've become more reliant as a society on the internet, on big tech. You've raised a lot of concerns about big tech. Are you more concerned now about big tech than you were a year ago?
Yes.
How?
Because big tech is now more powerful than ever.
You think they are?
Yes. They are more powerful economically. We rely on them more economically. They are more powerful socially. We rely on them more for our connections. And they are more powerful politically. We need to break up big tech.
Senator Elizabeth Warren there with our Kevin Cirilli. Coming up, we're going to talk about mixed reality with the lead developer for HoloLens. Alex Kipman will be joining us from Microsoft. This is Bloomberg. Companies have been betting on AR and VR as breakthrough technologies for years. Now, Microsoft has taken a big step forward. The company is unveiling Mesh, a new mixed reality platform that allows users to work and play together virtually from any location by interacting with the same set of holograms on different devices. Technical fellow Alex Kipman led the reveal as an avatar, and he joins us now in human form for our work shifting segment today. Alex, thank you so much for joining us. So you're the lead developer on HoloLens. You also developed the Microsoft Kinect. How does Mesh evolve those two technologies together?
Thank you for having me today, Emily. I am super excited to be here today. As you talked about, we launched Microsoft Mesh today. Microsoft Mesh evolves that story by really being a new collaborative platform. It builds natively on top of Azure, and it gives the developers the freedom to create mesh-enabled experiences that really do three things. The first thing, it allows us to experience mixed reality together, much like we did on the show today. Imagine having shared holograms between each of us where I can pass you a hologram, we can manipulate holograms together and really be in the same space where the holograms are shared between all of us. Now, the second thing Microsoft Mesh does is it gives us agency in mixed reality. It allows us to represent ourselves from avatars all the way to holoportation so that we can experience mixed reality together in a social way, even when we're not in the same physical location. And then lastly, as you talked about, Microsoft Mesh allows us to connect from anywhere and really any device, be it augmented reality with devices like HoloLens, all the way to virtual reality devices like Oculus or Windows virtual reality headsets, and even 2D devices like PCs or mobile phones.
So, do you think this is really going to change the future of the workplace, or is this something, more fun that's going to transform gaming and more consumer applications?
I think mixed reality ultimately is the future of computing. I don't think it's a question, it's a new medium of computing in a sense. Today, we're very focused where there is value, which is, to your point, within enterprise. As an example, and we shared that number today in the announce, 50% of Fortune 500 companies by now have purchased a HoloLens too. So I do think that it's transformative in enterprise today, but mixed reality as a medium will be transformative for everything and everyone in the future.
So obviously you've been developing in this space for a really long time, and I'm curious, what applications are you personally most excited to see?
Almost everything. As you mentioned, I've been in this space since the inception of it. But think about something that should be super visceral to each of us, right? This hybrid work environment that I think all of us are living in today, where in a sense here can be anywhere. And most companies don't have a single physical location for a headquarters right now. I'm most excited about being able to have collaborative computing experiences with my team from across the world where we can feel socially present without actually being there. I'm excited about being able to hang out with my family in Brazil and play something as simple as a board game where, again, I feel socially present without actually being physically there with them.
Now, let's talk to us about the devices you're going to work with the HoloLens, Oculus, PCs, the mobile phone. Talk to us about the form factor and when this will be a reality for, somebody like me.
Absolutely. From my perspective, of course, I'm biased and I prefer, head-mounted displays, things that you wear on your head to be able to visualize all of this beautiful mixed reality landscape. But a lot of it, in my mind, as particularly as you move into collaboration, is how do you bring in everybody and leave essentially nobody behind that's inclusive of the people with 2D devices. To your question around, when for someone like you, I do think that, ultimately you need to think about these devices as really needing to come up with three things. These devices need to be very immersive. They need to be very comfortable, and they need to have enough value for the task at hand. For consumers and more consumer-level spaces, I do think we're hitting the right marker in terms of immersion. I think we're not quite there yet in terms of comfort. I'm very proud to be the leader in mixed reality in the world with devices like HoloLens, but they're still, in a sense, goggles. Right? And until they become glasses and socially acceptable glasses, I think we're not going to get to call it, a mainstream space for mixed reality.
Right. Well, appreciate you helping us evolve on the comfort level. Alex Kipman, Microsoft Technical Fellow. We will be watching how this rolls out. Thank you so much. We'll be right back with more of Bloomberg Tech after this quick break. Social isolation has been a huge source of stress through the pandemic. Music has had the power to soothe and connect beyond the reach of technology. Bloomberg's Janet Wu takes a look at two groups in Boston using music to cross divides.
Freedom is coming. Freedom is coming. Freedom is coming. Oh yes, I know.
Music is a universal language. For 3 decades, a Boston choral group has been singing in the spirit of unity, even as a pandemic keeps us all apart. They're called the Halalisa Singers.
This name comes from the Zulu word celebration.
Director Mary Cunningham says the group was founded as a musical expression against apartheid.
I do like to tell people at the audition that you will be singing in many languages. They're like, okay, no, I really mean sometimes 11 different languages in a program. We've got people in their 20s. We've got one of our founding members is in her early 80s.
The Landmarks Orchestra also has an inclusive mission.
Landmarks has never charged admission for anything that we've done, so that's part of our accessibility magic.
Conductor Chris Wilkins creates concerts with unique collaborations, like this Korean concerto that included drumming and choreography. Landmarks also partners with Boston's museums to highlight art, themes, and moments in history.
Museum of Science, it was the 50th anniversary of the moon landing.
And when the pandemic hit, the orchestra forged on, putting musicians on rooftops with drones overhead to unite a city in lockdown. The message, no matter where you are or where you are from, music can always be experienced together.
During this time of so much political division, why can music help unite people?
Music is a miraculous vehicle because of its non-specificity. There's nothing you will hear around policy when you're listening to a piece of music, but you will feel this feeling of shared experience.
Creating that experience is what drives these organizations forward. Even with the challenge of closed venues and no ticket sales, they have gone online where audiences can both appreciate the music and support their mission.
You've got people singing in harmony, and that metaphor goes a long way. When you sing, you are connecting.
And music has the power to connect, even from a distance. In Boston, Janet Wu, Bloomberg News.
This is Bloomberg.